Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So checking in overseas, we did see most world markets follow the U.S. markets lower. Europe was down in a controlled fashion, while the Nikkei did get hit hard, about down 3% or so, while the Shanghai did come off 5-month lows. So looking at the action overseas, Scott, what could that tell us about what we can expect in our markets?
At this point, I don't think it's telling us anything we wouldn't have expected, because Europe was just as strong as the U.S. and it's going down in a controlled fashion. So it's not falling apart, it's not crashing, but it's come a long way, so it's correcting. As far as the Nikkei is concerned, that was up over 50+%. So of course it's going to be a little bit more volatility. Of course the swings are going to be bigger, and that was down 3%. So you know what, that is, I think, what, 7% or so down for the month off the highs. Still nothing, out of whack. We saw a 20% pullback in the Nikkei last year before it wound up going back to highs. And then Shanghai, which has been out of play, 5-month lows, still, kind of on the side, bounced. So just wanted to be cute and say, oh, look at me, day one up. So as far as everything's concerned, there's nothing crashing, but we're in a bit of a tricky corrective perhaps phase that if you're navigating on the short term, you have to pay attention so you can create some cash flow and alpha.
Right, because now we have some analysts calling for an 8, 10, 12% correction in our markets. So how do we judge what's next?
Well, over the course of the past, just say 2 years even, we make every few months, we make new all-time highs. During that road, or during that course, we've seen 7 to 9 little corrections. One of them was 10% last year, like a year and a half ago. And then recently last year, you had like 4 or 5 mini 4 to 6% corrections, and they all were triggered by some type of data take notice that you then had to measure to figure out what's next, because you never know. It could be a 2% correction, a 4% correction, a 15% correction. You'll know as you judge it and you watch the leaders and you watch the sectors and you examine the moving averages. If you look at the chart here of the SPX, you will see that, look at the move from, just say, starting all the way back here. This is, what is this, back in 2011, okay? And from 1100 to 1848, there's been some minor corrections. Right here, this head and shoulders top gave you a fierce one. This little head and shoulders gave you a smaller one. This breaking of this uptrend gave you another one. Then this, the May 22nd top gave you a move finally through this accelerated uptrend to the more intermediate. And then you had another one here and here. So the question is, what will this lead to? So let's examine it. Let's get it close up so you could see what I will be looking at in order to navigate this, because yesterday I went pretty much out of all my positions and I'm actually a little net short right now. So with that being said, here was that 5-day erratic random thin trade. So with that being said, with Jobs Friday, the analyst saying 10%, you slice through it. So now the question is, what type of bounce back do you have? So with that being said, I feel like if you wanted to short a bounce for this potential H pattern, what an H pattern is a continuation to the short side. So here is your pole, and then here would be the H, right? Here, doesn't this look like an H? A little bit, right? Lowercase h, boom, boom, boom. So with that said, question is, does it start here or does it start there? So this is my line in the sand. 1838, as long as we're below that, maybe be a very cautious tactical long, but think maybe of reshorting this move for potential lower prices to maybe the 50-day or even below. If we reclaim this area, then all of a sudden, I just talk about this being a channel, and then we figure out how much more time we need to navigate before something else. So write down 1824, 1832, 1832 is your line in the sand. That's where if the bears have any control, which they haven't had a lot of control over the course of the past 2 years or so, that's where they would want to put up enough pressure to reject the S&Ps.
Now, can we apply the same methodology to measuring different sectors, for example, like the Qs and the Russell, which we use to determine growth?
Yes, and I think that's what you look around. And, technology doing well is healthy for the market. Same thing with the Russell, so we might as well look at both of those. You go real quickly to the Qs and you will see yesterday you did also have a potent down move. So with that being said, I'm just going to write one line right here, okay? This is your spot for the Qs, 86.55 to 86.80. If it reclaims this area, then chances are we don't get much follow through to the downside. If it rallies here and fails, then perhaps you then have yesterday's low as a pivot. It trades through it. Then you have the 50-day right here. And then let's take a quick look at the trend here. It goes very long. Okay, you have a few of them. So here would be from the November. Look where that comes all the way down to. And then let's talk about the one from October, which was pretty recent, which was right here, which comes in, right around that spot. So, this is a crucial spot, right down yesterday's low and then right down that bounce point. And real quickly, the Russell, okay, look at this trend. It's been in this trend for a long time. As long as it stays in the trend is your friend. You've all heard that saying before. And now it's, going to be one of those spots where the bears are going to have to show us. Okay, at this particular point, it engulfed, it held the 21-day, right down yesterday's low as a point of reference, and 114.60. The bears want to keep on any kind of control. They don't let the bulls reclaim 114.60. If you were short yesterday and covered into the close, maybe that's a spot to re-short. But if we close above it, then you got to start thinking neutral to positive again.
And of course, we always talk about looking to the financials for clues about market direction. How can we measure the XLF?
Well, let's just talk about JP Morgan first. Came out with earnings. They were pretty in line, not blockbuster, but in stride considering all the money that it paid back. But it showed that they could even handle all the money that had to go back because of Madoff, because of the mortgages, whatever. So for the banks, this is what I want you to watch. Okay, usually a bank move happens within a few sessions thereafter. Here is your important support. Say as long as it stays above 57.50 in your short term, try and be long the banks or long JP Morgan. If it were to bounce back to 58.20-ish, that would be a spot that the bears would have to maintain control or fight. Otherwise, we're right back up and then we're right intact for higher prices. So here's important support. We start breaking below. That should bring some weakness to the market. And then this is your area that, could pose as some resistance if you're trying to play a bounce.
All right, and coming up, we're going to go in the trenches with individual stocks signaling what could be next. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with individual stocks signaling what could be next for us. Let's start with Apple, which gave us a nice red dog reversal yesterday right off the open. It tried to bounce, but did succumb to pressure. So what did you make of Apple's action?
It was oversold coming in, started negative, and it was a good surprising trade. But then when the market fell apart, it fell apart. So today, it's up a little bit. The question is, is it more than just an oversold bounce? If it is, this is the level I want you to watch on the chart. You come here and you take a look, you'll see this trend ever since the double bottom over the summer comes up. It just kind of held it right here, broke a little below, but came back above it. This 542 to 545 is your obstacle for resistance. Maybe it has some room to bounce back there, but if it were to trade and close above there, I would think Apple could get a little bit of leadership back. If it opens up today and goes negative, you got to watch out for 529.88. Overall, though, I do think that their quarter is going to be strong, and I'm not sure why we have selling pressure coming in there. But if you're a macro investor, I think you could still just stay the course. But as an active trader, 542 to 545 is resistance, and there's your support, and navigate it on some smaller time frames, because whenever a market's in kind of like a corrective phase, you have to just bring it in and take some money out and be more tactical.
What about one of the better looking high beta tech stocks out there, Google? Tried to be strong early on yesterday as well.
Yeah, and this one, there's a difference. Apple's trying to hold the trend line, and Google's trying to break out. If you're playing it for a breakout, now you need some time. If you're also not that committed to Google after a big run, you want to have a high level stop. So if you look at Google here, you will see that last quarter you had a huge gap up. Since then, it's been trending above the 21-day. As long as it stays above the 21-day and you're a swing trader, stay in there. If you're trading this actively and trying to navigate it for cash flow, yesterday you have a pretty ugly bar. So if it were to go, they did an acquisition yesterday. If it were to go from green to red and break below yesterday's low of 11.17, you better be careful to know where this support is, which is right around 11.09, or break below that, and there's downside pressure that could come. So right now it still looks good. See how it handles today. This is one of those stronger stocks.
How about over in social media? Twitter tried to bounce as well, but also succumbed to pressure. What about the divergences here between Twitter and Facebook?
Two different types of trade. You know, you have Twitter that's trying to like hang on to support, and then you had Facebook that had the potential to break out again. So two different ways to navigate. First, let's go with Twitter. Was upgraded by Goldman yesterday, tried to be strong all day, and then came back in towards the end of the day. You look at the chart here. You know, this is if you're trading it long versus, 55, 59, that's your stop. It got rejected by this resistance right here because of the market. So, this is the spot. If it were to get above this 60, 60, 50, perhaps, it'll start acting better to then go against this trend line. Okay, if it were to open up today and go red, you have to be careful that if this support gives way, you could see lower prices. And yesterday, Facebook was a lot different. Facebook's been stronger. Facebook was trying to show some leadership and give you some kind of vehicle that if we were going to go up, that perhaps this could have made new highs. But what happened? No, it broke this upper area. So if you were playing this upper area for continued momentum, yesterday you got stopped out. Hopefully you used 57-ish as a stop and then you saved yourself some money. If it's up a little bit today, some might even try and reshort this, close to, what is that, 58.96? Or not 58.96, I'm sorry. Let's see what that is so I can give you the right info. Yesterday's low, 57. So if it bounces back to 57 and shows relative weakness, maybe you could short that for then continuation below yesterday's low, and that can get you down to the 54 area. So right now, if you were trading it for a breakout, hopefully you use yesterday as a stop, and now you're just being tactical, because it could be forming a big channel here, and right now it's just smack in the middle and not telling you much.
How about over in 3D printing stocks? 3D Systems tried to be strong, but did come under pressure around midday. It did break below the 8-day, so now is it in sort of a tricky spot?
Yes, these names are built for perfection. They have high valuations. They have great new technologies, and they've been unbelievable winners. But when they correct fast. And any type of momentum name, you need to know what to do, how to navigate. And typically with these, once you get a little bit below the 8-day, that shows you that it's not as strong, and you might want to think twice and think about at least your time frame. So you go to Triple D, you'll see that yesterday, it tried to be strong and then broke below the prior day low of 93.33, gave away the 8-day. So if you were playing it for a potential move above these highs for a breakout, yesterday you got stopped out. If you've been in it, all the way down since 60 or so, or whatever it is you're due here, yesterday's not too, significant for you. But, you look at this 21-day moving average and you look kind of at this trend right here, I think it's somewhat important. If it breaks below 90.26, this type of move that happened so, it was so fast and furious and big could correct. So know your time frame here. Here is your support. If you got stopped out yesterday, congrats. If you went home short because of it, you're making a little bit of money. Now this 21-day moving average needs to hold. If it doesn't, you could see 81. And then all those little guys that we were talking about, VJet, Onvo, X1, they all tried to break out, but they broke out and failed. So if you're playing something to break out and it breaks out, holds above it, and then comes back below that area, you leave. Right. Okay, you hopefully made a little bit, and then you trailed a little bit, and then you broke even, and then you say, okay, I'll try again another time.
Right, exactly. All right, well, let's do some quick hits here and talk some coffee-related stocks. Starbucks and Dunkin' Donuts both looking weaker. Could these be potential shorts?
Yes, both of these have been really good names, and I still think, longer term, if you have it in the drawer and you've been holding them for multiple years, you're okay. But again, if you're trading on intermediate time frames or you're trading it for cash flow, be careful. Okay, go to Starbucks first, so to speak. Starbucks, you take a look at this trend. Hopefully, if you're out of it because you trade trends, you sold it already. Okay, you look right here. This trend to me now is sort of broken, and you also have a little bit of a head and shoulders top, left shoulder, head, right shoulder breaking below on this mini, futures bounce. Maybe it's up a little bit. If it were to retest 76 and fail there, I think that, this stock has a destiny with maybe 71.28. And then if you look at Dunkin' Donuts, which was one of my three amigos, and I still think longer term it's okay. We've seen corrective phases. This now looks as if, it could correct also. So as long as it stays below, just say 46.40, I think that you can get a cute 3-point move down to, or 2-point move down to 44, a little bit of an air pocket there, and then you could figure out whether or not you could buy that dip.
And what about Walmart and Target? Two stocks painting a weaker picture for retail. What do you think about these names?
Target's had the issues with the theft of the credit cards, and that's been weaker since last year. Walmart looks like it's starting to get a little weaker, and retail has been one of those spots that's concerning. You look at Walmart, look at the chart, you'll see here that, this too could be a little vulnerable. So with that being said, right there's the spot. If it were to break below this, just say 77-ish, you could see a move back down to, 74 or first moving averages. So at this point, I would just be careful. This is when this trend broke here. So hopefully, if you were trading Walmart, trading the trend of the 8 and the 21 day, you're out of it. Now you have a higher low. So this is important support. Watch 77. As far as target's concerned, not much you could say there except for the stock's been weak. It's in the news every day. Here was one trend line that broke, and now it's coming into some major support here. I would have thought that it could have bounced, and it hasn't yet. So perhaps if the market gets weaker, this thing could see closer to 58 before you get something more interesting to look at from the long side.
All right, Scott, so in summation, what are your closing thoughts as we head into the trading session today?
Just follow your process. If you are in portfolio approach because you're following the 8 and 21 day yesterday, you should have reduced risk. If you did so, great. If you're looking to try and make some money from the short side, which has been hard to do, you better make sure that this bounce is feeble. You better make sure that the bears have some control. We went over those areas in the S&P. Resistance 1, 1823. The more important one is around 1832. 1832 is that line in the sand. And then, you have earnings season, so you got to know what you own, where you own it from, what it's priced in, what your time frame is, and, there's some volatility during that area. And overall, corrections are good. We're allowed to correct 4, 6, 8, 12%, and then still at some point this year make new highs. It's good. It gives you entry points. Especially if you trade technicals and you trade actively, you can create alpha from volatility as long as you embrace it and you follow your process close, and, you just pretty much go with your stops and you have your discipline and you follow your money management rules.
All right, there you have it. That's your morning call for this Tuesday. Happy trading. Have a great day.